And our final guest for today is Mr. Jeff Small. He is president of Arbor Financial Group, just up the road from me in Melbourne, Florida. Jeff, I like to say we saved the best for last. Welcome back to the show.
Well, I'm glad you're telling me that because it's true.
All right. Well, 12 months from now, our viewers can be the judge of that based upon what you say. So let's get right into it then. The economy.
Well,
will we have an official recession in 2019, or do you think the president could keep things growing and push off an official recession until 2020 or beyond? Your thoughts?
certain parts of the economy will experience recession. We're already in recession in autos. That's just one segment, but we've been hit by about 15% as a decline in the market. And so the financial oasis that we've had is turning into a mirage as corporate earnings have peaked and everybody expects a downturn next year in corporate earnings. So we're going to see the market drop from here. It's going to be a slow and steady house of pain.
Okay, so slow and steady house of pain. The economy. Do you think we'll officially be in a recession, economically speaking, next year, correct?
The economy may not be in a recession, but the market will be in a recession because it was an overbought market. The market just got too high for its own good, and now demand is drying up as the Fed increases rates. It's causing a global contagion or an economic slowdown, not just domestically, but globally, and that's going to pull down the markets even further.
So let's talk about the Fed then. You heard Mr. Powell's comments just this past week. Do you think the Fed's going to keep trying to aggressively raise to give them, quote, more room to adjust come the next recession? Or it actually perhaps cause it? Or do you think maybe, just maybe, they'll stay out of the way of the markets and increase a lot less?
Well, I think the Fed is hyper concerned in a confidential sense of the coming debt bubble that we're getting ready to experience. And so they're ratcheting up rates to prevent the actual acceleration of debt. And we're going to see a deacceleration of debt, which is going to hurt the economy. So by the second half of next year, we will start to feel the effects of that deacceleration as we come to the peak of the debt cycle.
You think they're concerned about a debt bubble causing a recession? Is that why they're trying to do this? Is that what you're thinking?
I really do, because they've increased corporate debt in a tremendous sense, Dave, and a lot of that starts to mature in 24 months, as well as the governmental debt as well. And that's a whole nother story. But the reality is the debt service is going to double federally and also in corporate America unless they reduce rates to zero, because rates are going to zero in 24 months or less. Yeah, and they may even go negative, too, for the first time ever in our history. So final thought, 30 seconds. I'm going to pin you in the corner. Where do you think the stock market's going to end up at the end of 2019? If you had to give me a number or a range, what would you say? I think we have a 20% downward trend from here, maximum of 38%. Best case scenario, we're down 20% in 12 months, but it's going to be a trend market, and it doesn't matter what the economy does. The market's going to gradually unwind, and there's not going to be any demand for the next 12 months in the market. Now, I can't argue with that. I tend to agree with you. I got to tell you, I always hate to go with the consensus, but of our 10 guests so far, you're in the consensus. One thought we'd see a bull market throughout next year, so we'll see what happens. Jeff, thank you so much for being part of the show. Thank you, Dave. Stay with us. We'll be right back with my prediction here for 2019. Here on The Income Generation, I'm David Scranton.